If you're a Canadian living abroad, you've probably asked yourself, how much does the Canada Revenue Agency really know about my life overseas? Well, the answer is probably a lot more than you think. Let's get into it.
And this isn't just some theoretical what-if scenario. Take a recent court case from 2021. A woman was living in the US but kept claiming she was in Canada so she could collect benefits. Well, the CRA caught on, and she was forced to repay every single dollar. It's a serious wake-up call about how real this can get.
And here's the interesting thing. The risk isn't just one-sided. It's not only about collecting benefits you shouldn't be. Getting your residency status wrong can land you in some serious financial hot water, no matter which side of the line you think you're on.
So, on one hand, if you claim you're still in Canada to get benefits, but you've actually left, you're going to have to pay all of that back. But on the other hand, if you claim you're a non-resident to avoid Canadian taxes, but the CRA decides you haven't really cut ties, you could get slammed with a huge bill for back taxes on your worldwide income, plus a mountain of interest and penalties. So yeah, getting this right is absolutely crucial.
So how does the CRA figure all this out? Well, the first, and maybe the most obvious way, is by tracking your physical presence. Literally, your footprint on Canadian soil. Every single time you cross the Canadian border, doesn't matter if it's by air, land, or sea, the Canada Border Services Agency, the CBSA, logs it. And here's the real game changer. Since 2019, that entire database is fully accessible to the CRA. So if you say you've left for good, but their data shows you're popping back and forth all the time, that's a massive red flag that's going to trigger an investigation.
All that travel data is so important because of the CRA's 183-day rule. This leads to this really powerful idea of a deemed resident. It basically means that even if you legally live somewhere else, have a foreign passport, and pay taxes there, the CRA can just deem you a Canadian resident for tax purposes, based purely on how much time you spend here. Your opinion on the matter? Well, it doesn't really count.
183 days. That's the magic number. It can be spread out across a bunch of different visits during the year, but if you hit or go over that number, boom, your entire tax status can flip, just like that.
Let me give you a real-world example of how this can bite you. Let's call her Patricia. She moves to Portugal. She declares herself a non-resident. So far, so good. But she came back to Canada 4 different times that year. The CBSA added it all up, and the total was 210 days. The CRA saw that, reclassified her as a resident, and suddenly she owed Canadian tax on her entire worldwide income for that year. Ouch.
But it's not just about where your feet are planted. In our totally interconnected world, the CRA is also following the money trail. And this is where the whole idea of national borders starts to feel, well, a little blurry.
You see, the CRA is part of this huge financial surveillance network. Through something called the Common Reporting Standard, over 100 countries automatically share your banking info with Canada. The US has its own special deal called FATCA to do the same thing. On top of that, banks are required to report any cross-border transfers of $10,000 or more. Oh, and if you're still getting T4s or T5s issued in Canada but you're not filing a tax return, that's an instant red flag.
$10,000. That's the threshold. Any wire transfer, bank draft, any electronic funds movement over that amount, and it gets automatically reported.
You know how in the movies, people are always moving money around just under that reporting limit? Well, there's a reason for that. And this applies to everyone, not just for sketchy deals. Even if you're just moving money between your own accounts across the border, if it's over 10 grand, it gets logged. Period. Okay, so beyond your physical location and your money, the CRA looks at something a little more subjective: the residential ties you've left behind. These are the connections that can keep you on the hook for Canadian taxes, even if you're thousands of miles away.
And the CRA puts these ties into 2 different buckets. First, you have significant ties. These are the big ones: a spouse or dependents in Canada, or a home that you still own here. To the CRA, these things basically scream that your life's center of gravity is still in Canada. Then you have secondary ties. Things like Canadian bank accounts, credit cards, a driver's license. One of these on its own might not be a big deal, but when you add them all up, they paint a picture that can definitely tip the scales against you.
So, what happens when all this data, your travel logs, your financial records, your residential ties, what happens when it all points to you and the CRA decides to open an investigation? Let me tell you, things can escalate, and they can escalate fast.
It usually starts with a simple letter asking for more information. But if they don't like your answers, they'll start collecting data directly from your bank, your employer, your credit card companies. If you still don't cooperate, they can get a court order to force you to hand over documents. From there, they can retroactively reassess you for years of back taxes, add severe penalties for gross negligence, and in the most serious cases, it can lead to criminal prosecution, massive fines, and yes, even jail time.
50%. That's the potential penalty for gross negligence, which is basically when the CRA believes you intentionally misled them or were just completely careless.
And let's be crystal clear. That's not 50% times a tax you owe. It is a penalty that gets added on top of the full tax bill plus all the accumulated interest. It can turn a bad situation into a financially devastating one.
And the consequences don't just end when you paid up. Once you're flagged by the CRA for residency dispute, you stay on their radar. Every tax return you file for years to come is likely going to get extra scrutiny. It's a long-term headache you really want to avoid.
All of this brings us to one final thought. In this world of digital footprints and global data sharing, are national borders becoming, well, invisible to tax agencies? For organizations like the CRA, it seems the world is becoming a very small and very transparent place.